Yeah, so I guess from an IHS market perspective, the energy value chain continues to build out all the way starting at the wellhead and going down through the midstream pipelines, the export terminals and facilities, as well as the domestic logistics, and then down into the chemical and in some cases refining side. So, that is all really continued by shale and shale developments. From an overall perspective, we're quite bullish on the opportunities that shale has. This year, the Permian Basin will probably surpass, all kinds of expectations of just a few years ago. We expect Texas is going to be producing something like 4 million barrels per day of crude oil. On its own, that would put it at number 7 in the world if it was a country.
Yeah.
And the U.S. Is going to move into the number 1 position sometime in the next 6 to 12 months in terms of overall production. So that's creating opportunities on both the natural gas chain as well as the natural gas liquids value chain, and then in terms of exports for crude oil, other opportunities. And so the construction side itself, we're quite optimistic about on an overall basis in terms of opportunity. I think the challenges have been in terms of the efficiency and the effectiveness of what's been getting built. The capital construction costs are quite high. There's been quite a number of delays. Some of that's weather related. Some of that's in terms of trying to bring back and build up a labor force, a direct hire labor force that hasn't been in place really for more than a decade. And so while the opportunities are there with shale, we're a bit concerned about how much of that the U.S. gets to capitalize on, and as opposed to markets overseas. So, for example, within the ethylene polyethylene value chain, which is one of the keys, we have seen a big wave of investment by those that already had established facilities in the first round that could build on brownfield expansions. And those are underway and now being realized in the final throes of commercialization or through the next 6 to 9 months, finalized construction. And there's a number of others that have been planned and are also underway. Some have passed board internal approvals, others have to get final investment decision and approval by their boards. We think that this trend could continue on through 27, but when that in that value chain that I was going to go down into, there's a question as to what do you actually export and where does the plant get built. So, for example, you could build the pipelines from the Permian and the natural gas liquid processing facilities and the export facilities to export ethane and build that facility in China, or you could build it here and export polyethylene pellets or ethylene glycol, some of the finished product. And the decision on where you stop and where you continue to build is a function of the overall competitiveness of not only the cost, the delivered cost of those products into the markets that you're focused on, but also what the relative capital cost is. And China can really eat our lunch with respect to capex. And for example, by our estimate, someplace between 50 to 70% of the construction costs on the U.S. Gulf Coast. And so when you take that into consideration, it's quite possible, and we're seeing a number of projects being developed in China, that rather than have that ethane be converted and produced into pellet and then exporting the pellet, where we get all of that capital construction associated with the ethylene and polyethylene facility, we could simply be exporting natural gas liquids and having that capital construction being pushed onto on the overseas into the Chinese market. And so we right now are calling for the vast majority of the capacity to be built here in the U.S., but that assumes that we're going to see some pretty significant improvements in overall capital productivity over the next couple of plants that get built, because otherwise, there is the potential for overseas companies to come in and kind of take that feedstock away from the U.S. Gulf Coast and put those plants up in China rather than the United States.